The AI sector that made the biggest profit for us in 2024 is the one to take the biggest hit today. SOUN AI is down more than 50% just this year. C3 AI is in the red. Big Bear AI, the same. If you've been following these stocks and right now you're wondering should you buy the dip, don't rush the things because everything is not that simple. Right now, it's not about which one of those companies is the most hyped one, and even not about which one has the strongest tech. Right now, the main question is which one can survive this market and whether you as an investor can afford to lose a big chunk of your money if the business of some of these companies actually goes down. Hey there and welcome to the Market Monkeys channel. It's Julie here. Today I will break down the most important numbers, we will compare these stocks, and I will answer the question how these market conditions will impact the stocks of the companies we're talking about today. Let's address the biggest issue right now, the market. And the market is brutal for anything that is speculative. The cash right now is expensive. Inflation will hit up as a result of tariffs if they won't be cancelled completely, and they aren't cancelled completely right now. And as a result of this, investors are shifting into more safe instruments, for example, like bonds or dividend stocks or consumer staples, value stocks, etc. That's why we're seeing massive money outflow from the risky high growth sectors, and AI being the highest growing sector in 2023 and 2024 is paying the biggest price right now. By the way, the fact that Trump says that the tariffs on China would be lower, the fact that markets are going up doesn't mean that everything is okay and everything stabilized. In fact, there is a huge risk of a recession this year in the US. Now let's talk about our three stocks. SOUN, Big Bear and C3 are all famous in the AI space, but they operate in completely different segments. For example, SOUN AI is the consumer-facing voice AI like smart assistants for cars and restaurants, and this company is the one that's the easiest for us to imagine what they do and how we use the tech of this company, so as a result it's one of the most likable ones. C3 AI is very different. It's enterprise-grade, focused on solutions for fraud detection, predictive analysis, and big corporate problems. And by the way, their main competitor is Palantir. Big Bear AI, probably the least known of the three, is positioned in government and defense sectors, offering decision intelligence tools that help institutions manage different tasks. If you find this information valuable, don't forget to support this channel by pressing a like button and subscribing. Now, none of them are profitable, and it's not surprising. They're early-stage tech players in this new growing AI sector. As a result of this tech being very expensive to develop and an insane competition in the market, these companies have a huge losses. For example, SOUN reported a net loss of over $350 million in the trailing 12 months. C3 AI is at a bit less, $281 million. Big Bear is bleeding down nearly $296 million. So yes, they're all burning money, but the question is what they're actually getting in return. In terms of revenue, C3 is the leader with $367 million in trailing 12 months. SOUN is far behind at $85 million, and Big Bear is right in the middle with about $158 million. But of course, it's not the most important metric because, as I mentioned earlier, these companies operate in completely different spaces, in completely different segments. It's the same as we would take, for example, tech as a sector, and we would compare a company that makes cloud, for example, if AWS was a company of its own, and we would compare it to some company that makes a hardware for computing. I mean, yeah, they are in the tech space, but we cannot actually compare them because they operate in completely different spaces, they have completely different clients, completely different gross margins, and as a result, different revenues. So I suggest we take a look at gross margins, and I suggest we take a look at the growth rate of our three companies. And the interesting part that SOUN is growing the fastest of all. Their revenue jumped over 80% year over year, and of course it was thanks to the acquisition of Amelia AI. By the way, I have many videos about SOUN on our channel, you can go and check them out later. I break down the impact of acquisitions on this company, on the results, the business, and everything basically investors need to know before investing in SOUN AI. But even without the acquisitions, this company would show much better results than the other two. Without the acquisition, we would see the revenue growth of approximately 40 to 50%, while C3 grew less than 25% and Big Bear at below 2%. The problem is that this kind of growth doesn't come for free. SoundHound is burning over 100 million just in cash from operations. C3 operating cash flow is better, they lost around $30 million. Big Bear is also much lower than SOUN. Cash from operations is basically how much cash the company brings from its core business. And let me give you a simple example. Let's imagine that you run a coffee shop and you've made $10,000 a month. Let's even imagine that it was 80% year over year, or month over month, or quarter, doesn't matter. It sounds like you've made a huge progress and your business is evolving. But let's imagine that you didn't pay yet to your supplier and you owe him $4,000 for the coffee beans and milk. After this, you need to pay another $4,000 to your workers and another $3,000 for the rent and some other bills. So even though you've made $10,000, your cash from operations is actually negative. You actually lost money. So the same goes to SoundHound AI. It looks like the company is growing, but it's actually burning a lot of money at the same time. Now let's move to valuation. SoundHound AI is trading at a price to sales ratio above 30. And that's a lot. That's the number you only tolerate if the company is growing explosively and has a clear path to profitability, and SoundHound is actually not there yet. By the way, I like SoundHound very much. I think it has a very cool product. I believe in the future of this company, and as opposed to C3 AI, for example, I think it stands a big chances to win the competition in its sector. But fundamentally, it's still very, very expensive. C3 AI price to sales ratio is 6.6 and Big Bear is at 3.5. By the way, here, very important to understand that we must take into account the whole picture. We cannot take only the growth, as I already mentioned before, the same as we cannot take only the valuation. If you would look at the valuation of Big Bear AI without the rest of the metrics of this company, you would think that this is the best choice to invest in. But that's actually not true. So in case of Big Bear AI, when the company is spending a lot of money, the company is not growing, this low valuation is actually a warning sign that something is very wrong with the company rather than a buying sign. In general, when people see valuations going down, they think it's an opportunity. Everyone screams buy the dip. But what we're seeing in these stocks isn't value being created, it's actually hype being slowly taken out of the equation. This is the moment where future promises aren't enough for investors and they expect to see some real results from the companies, but these companies cannot deliver the results right now. It will take for them some time because the sector is new. It will take some time for AI sector to establish in our lives more. And this is exactly what causes these stocks and these sectors to fly down right now. SoundHound is already down almost 60% this year. Big Bear AI and C3 AI are both down 40%. Besides that, the fact that stocks crashed 50, 60, doesn't matter how many percent this year, doesn't mean it can't crash more. If we will enter the recession, there is more space for the stocks to fly down because they are in the high growth sector, and especially stocks like SoundHound AI would be hit because they're overvalued. If you don't believe me, take a look at this. Over the past year, even including the crash, SoundHound is still up more than 100%. Big Bear AI is up 64%. C3 AI is down, but it had its up moments as well. So in the uncertain market conditions, if a recession would hit, I will repeat again, the stocks have a way down to go, and this is not a dip, so stop calling it a dip. So how did I play these stocks and what I'm planning to do in the future? First of all, it's important to understand that it's okay to like the business of these companies. I like the business of SoundHound AI very much, but would I invest in an unprofitable and burning cash company that has a valuation of price to sales of 32? I mean, yeah, I would. I invested in SoundHound AI when it was $6 per share, a little less than it is right now. It was overvalued, but the time was completely different. I traded the sentiment of investors. I traded the positivity of the market and it worked. I actually got huge profits from it. But right now the conditions are completely different. Right now it's not the case and you won't get big profits if you invest right now. I actually wrote 2 articles, one about C3 AI and another one about SoundHound AI about a month ago, a little more than a month ago, before all of the news about the tariffs and everything that happened, and I actually said that depending on the market conditions and on the economic conditions, we might see these companies crash even further. I suggest you go and read those articles because they're still relevant. If you don't have a membership on Seeking Alpha, this is your chance, because right now they have a spring sale and you can get a discount if you will use our affiliate link that you will find in the description and in the first comment. I would appreciate if you would write me a comment and say, what do you think about these names? Did you invest in any of these companies, or maybe you're planning to invest right now? Thank you for being with me. Don't forget to press a like button, subscribe to our channel, share this video with someone who might be interested in investing in AI stock, and I'll see you on our channel next time. Happy investing!